Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, October the 11th. The year's 2020. Let's talk trading. It's time for the weekly open and gap. Just so you all know, these videos are for educational purposes only, and your results may differ from mine. And traders, this week, make sure you have your risk management in place. Do not lose any more than you're willing to lose on any one particular trade. That's how you stay in the game. And you have to get your brain management in gear also. No fear, no regret. Then you won't have any pain, because pain comes from your reaction to the market. And on the money management side, you have to learn to take profit before the market takes it back. Sure, sometimes you might get out and then the market takes off in your direction, and you're going to remember those. The ones you're not going to remember is when you get out and then you're glad you got out because the market reversed. You're really not going to remember too many of those. Okay, on the weekly open and gap chart here, you can see we have plenty of pairs that haven't filled the gap. I wonder, will the pound fill the gap? I guess we'll have to wait and see. It gapped down 20 pips. Looking at the opening ranges here, we've got the first day of the year opening range, first day of the month opening range, which we popped out on Friday of last week. We also popped out there on Monday, Tuesday. And you can see we're above that range, and we're putting in the range for the week right now, the first candle of the week, which is today, the Sunday, or it's Sunday right now, but on my chart, it's actually, you can see server, it's the 1012, which is the Monday candle. 219 pips below the daily open. You can see we're 115 pips above the monthly open. And we broke out of the inside bar 4 weeks ago. On Friday, we broke out of the inside bar 6 days ago here on Friday. And you can see here we have some inside bar action, the grays, but we don't have too many blues here. In fact, we don't have any on the month. That's pretty interesting. Oh, and it's early in the day. You see we're only almost 6 hours old, so not much range, nothing to write home about, nothing to be alarmed about. Now, this is very interesting. You've got a gap here on the open, but you've got the pivot point below. Which way do you trade? Which way do you trade? Well, if you play the opening gap, you'd go long. If you're playing for the pivot fill, you go short. And if for some strange reason you usually do both, well, this is one of those days where you just have to stand aside, because you've got, once again, the Friday's close is above the weekly open or daily open right now, since they're both the same, but the pivot point's below. Rat traders, range is way too low at only 17 pips, so we're not even going to concern ourselves with the rat trades. Pivot point, daily pivot 1.29969, call it 97. Look for that to fill. Weekly pivot 129971, or I'm sorry, 771, so 129.77. We're going to look for that to fill. And the reason we look for that to fill is because we don't have many that miss. So being filled. So we're looking for this to fill on the daily, and then this to fill on the weekly. So you see here, once again, in 2019, there were no unhit weekly pivots. Have to go all the way back to 18. Then you can see there was what? 17, 16, 15, over 3 years in a row. And it hit all of those weekly pivots. Wick zone, we're below the wick zone here, so we're in the body of the candle, seeing which way price is going to meander. And on the range charts, you can see Friday for the range high minus low. We had 140 pip range, and that was at the 73 percentile. And for those of you who are new, that means out of the last 100 bars, 73 of those bars were below 140 in range, and so then 27 would be above. And then we also look at the high minus close. You can see here, price didn't leave the rat zone the past 2 days here on the close, or actually this is today, but right here on Friday, it didn't leave that rat zone. It was only 3 pips off the high, so that's one of those days where those red rats didn't get the feast too much. And then here on the other side, close minus low, it was huge. But then you can see 4 days ago on the downside, the green rats didn't get the feast either. You can see that right there. No green rat feast, no red rat feast. So even though the stats are on your side, this is something you have to realize. It's not going to work each and every time. That's why you have your stop losses in place. And that's why you have to learn to take profit when the market gives you the opportunity. And just one of the trading screens here, you can see the Walmart lines here at 30 and 20. Nothing much happening. We're going to get a new, they're going to be at the same place here, unless in this last minute or so, we get the bid above 30. Doesn't seem to be happening though. And the simple price action chart, those of you new to the channel, especially if you're new to trading and you want to learn how to trade, all you need is a horizontal line. And you learn to trade at that horizontal line, and it will serve you well throughout your trading career. Because there's nothing that you will not use when you're trading at a horizontal line. You'll be using your risk management, your money management, your brain management. You'll have to have your trading plan in place. You'll have to execute your trading plan. So all these things, these fundamental things of trading that you learn will serve you throughout your trading career. And you can see here, it's very simple. If the H1 candle color is green at this line, you go long. If it's red at this line, you go short. And here it hit the line and reversed. So depending on where your stop loss is, you're either in that trade or you stopped out. Maybe you just scratched it with maybe a 1 or 2 pip loss. Maybe you're still in it. But that's how it works. And one of the things when Walmart and I are trading, we're usually looking at an M1 or M5 chart like here, and a lot of times we'll switch over to the M1 chart, and we'll be looking to trade off of 1 ball or 2 ball reversals, and we'll be just taking a pip or two over and over and over and over and over again, and they add up. I mean, some of what we did last week, I don't even really want to tell you guys, because either A, you won't believe it, or B, you're just going to be like, you're going to want to do it, and it was just crazy. I don't know if we just had a hot streak, lucky week, but let's just say there was some draining of the banks going on. It was too much fun, actually. We were cracking ourselves up. Because we had a couple of those days where the price, went down and spiked up, like right here. And we caught a couple of those, and it just, we don't look for 40, 50, 60 pip trades. That's not our plan. No, we're looking to make, a couple of pips, maybe 5 pips if we're lucky, over and over and over again. And, as Walmart has his 10 pip core, but if he more than exceeded that last week, in the last few days, each day. It was just funny. Like I tease him a lot. I know he'll probably listen to this video because Walmart, you're an addict, and it's my fault. I ruined you. I know, but it's really pretty funny though. But it just goes to show how when you do something over and over and you stick with things and you keep it simple. I mean, we're trading the same pair. We're using the same things. We're not adding very much to it. Every now and then we might make a small tweak where, maybe instead of using the mid dots, we'll use the previous candle's low for a trigger or previous candle's high, and we'll just see what's working and we'll just take advantage of it. And we just pretty much adopt and adapt to the market. And it's really not that difficult. We're not doing anything that fancy. We're taking advantage. We always have an eye on the range, the H1 range and the daily range, just to see how far things have gone. And so once they've gone a certain distance, then we know it's time to look for reversals. And in fact, this week, I was talking with Walmart earlier today, just to chat. I said, really, if we're above the daily open and we go short, we should just really only try and take a couple of pips. And just like if we're long below the daily open, we should only try to take a couple of pips. And that way we might not get caught where we're winding up maybe having to add into a few trades as opposed to and taking advantage of what price is actually doing. So if you come back here to the range chart, what we look at is, once again, not just the high minus low, but the high minus close and the high minus the open and the open minus the low. Just once again, just to see how far prices move before we start looking for price to come back the other way. And we can just look at the percentiles over the last 100 days or 100 hours, whatever we want to look at. And it just gives us just that little information, little statistics to see whether we should wait, because there's always going to be another trade. So there's no reason to get angry for passing up a trade or missing a trade. I mean, I think I probably missed about a half a dozen trades on Friday just because I might have just switched the chart just for a second. It's like, dang it, I missed that trade. Or I just wasn't paying attention for whatever reason. Or I hesitated and it was like, oh, too late. And sometimes price moves so quick, there was no opportunity to get into the trade. So sometimes it's like right before the candle closes, we look at this, it's like, okay, there's like 8 seconds here, 6 seconds, 5 seconds. If I want to take a trade, I might jump in now right before the candle closes because this thing could shoot. So, for example, if I wanted to go short, it didn't happen this time, but if this candle had shot down 2 pips, I missed my entry. So sometimes, depending on what you're trading and how you trade, you'll figure out what you have to do in the present situation. That's why I say it's how you trade it. So, here we got a signal. We got a 1 ball at the top, open below the mid dot, and right here could have taken that trade on the short side if you wanted to. But the point is that you have to figure it out what you're doing. And then you trade accordingly. As you can see here, here's the ask way up here, and then this is the bid way down here. But this is not the time of day that I normally trade, so no, I won't be putting on any trades during this video because the range just isn't there. If you go back and look at some of the earlier Walmart videos, I had the range indicator where we actually look at the range per hour, each hour of the day, knowing is it going to be bigger than 13 pips or not? Because if it's not, then we don't want to trade it. So that's it for the weekly opening gap there, fellow traders. I hope you have a profitable week this week. And just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new, welcome to the channel. Please click subscribe, click the bell to be notified, and share this video all over the internet. This is the Rumpled One, over and out.